So what I'm going to be talking about today, first of all, who is Novus Modus, what we do, and then I'm going to give you an investor's perspective on the smart grid. So what we see as the risks and opportunities, what has been happening in the past in terms of investment trends, and what we think is going to happen in the future, and what we are looking for in that market. So Novus Modus, we are the investment advisor to a 200 million euros clean tech fund that was set up by ESB, the Irish utility, in 2009. So we invest purely in clean tech and renewable energy. And what's really important to mention is that we are an independent fund manager. But we have a very close relationship with ESB, and that provides us with strong engineering capabilities and also the backing of a utility and the perspective of a utility, which is very helpful in evaluating smart grid investment. So we have a global mandate, but really a European focus with offices in London, Dublin, and Munich. So what do we invest in? We invest all across the electricity and heat value chain. So from the low carbon generation to the efficient delivery and usage of electricity and heat. We make equity investments between 3 million euros to 20 million, and that can be staged across multiple rounds. And because we are minority investors, we are happy to partner with other funds in making investments. Okay. I think that we all agree on this point. We know what are the drivers for the smart grid, so I won't spend too much time on that, but it's really with the increased electrification of transport and heat and with the decarbonization of the grid, it's going to be important to actually make more with less with our grid and to help us achieve those goals. But because I'm an investor, I always like to quantify those things with numbers. It helps me understand the scale of what we have to achieve. So we can argue about the specific numbers later on, but essentially what it shows is if we want to meet our 2020 targets, or even the targets we have set ourselves for beyond, there can be some above 200 billion pounds that will be needed to achieve those goals. So I think it really puts a figure in terms of like, oh, if the electricity bills are going to increase by 40 to 60%, well, I think now we understand where that comes from. But really how much it's going to cost at the end depends on the measures we're going to implement. So if we look at the cost of abating a ton of carbon, you really have a wide spectrum. So on the one hand, you have behavioral change, which are essentially free, except for educational programs or providing the customers with more feedback, so in-home display. On the other hand, you have supply measures, sort of wind, solar, biomass, name it, which are definitely going to have a role to play and a big role to play in achieving those targets, but are still, unfortunately, remain expensive. In the middle of that, well, you have demand-side measures, energy efficiency, and which provide much more bang for your buck, but unfortunately, for sometimes the authorities do not provide you with the let's cut the ribbon type of picture opportunities. So no matter under which direction we decide to go ahead, the smart grid will be required because it's going to be a mix of all of those measures. And we're going to need, as I said, a two-way flow of communication and energy, because that's my definition of the smart grid, which is going to enable us to do more with less. So we should essentially have increased participation from demand side, distributed generation, electrification of heat, renewables. So we're going to have to find a lot of investments. There's still a large funding gap. So what's in it for investors? Is it an attractive sector? Is it not an attractive sector? I mean, the short answer is yes, it is an attractive sector. But then my presentation would be fairly short if I stop there. So I think I'm just going to expand a bit of that. In terms of the risk and opportunities, on the good side, it's a very venture capital friendly sector. So there are a number of companies approaching commercialization stage, which is where we like to operate. Sorry. Yeah, exactly. But the key risk of that is at the moment you have a large number of companies which have secured either trials or pilots, but you still have kind of a long lead time before they will be able to secure rollouts. So what you can expect from that is you have the risk that actually those pipelines will not convert into sales, and then you may have a high attrition rate where a number of companies will actually not make it to either profitability or a sufficient scale. Also, the good side of that potentially is that there are relatively high barriers to entry. So once you have secured a rollout and you have a close relationship with a supplier, then it becomes increasingly difficult for other companies to compete in that area. In terms of government commitment, there is definitely a driver. Smart meters are going to get rolled out. You're going to have in-home displays. It's in the regulation. So there's a strong push from that point of view. But the counter side of that is that there's still a lot of uncertainty. So there are a lot of requirements or specific details that we're still unaware of. And you're going to have suppliers which are going to go in two directions. So you're going to have the early adopters. British Gas, I think, is definitely one of them, which are going to try to actually shape the regulation or shape the requirements and are going to roll out products early on. And then you're going to have other ones who are just going to be more followers. And then you just hope that actually when you make an investment, you pick that first category where actually you have chosen the winner, essentially. And why it's a challenging sector, but an attractive one at the same time, is that you have large communications and industrial players also active in that market. So they can potentially crowd out the market, and that's competition, and very tough competition. But at the same time, if you're an investor and you always think in your mind, well, myself and the management team are going to sell the companies in 5 years, well, they can provide attractive exit routes. In terms of the fundraising activity, so what we've been seeing in the past, really increased activity since 2004, with 2010 being a record year with over $700 million in transaction. So 2011 will probably not be as good in terms of fundraising activity. But that being said, it's been more than offset with increased M&A activity. So I think the graph speaks for itself. And I can see here one of the panelists from Landis+Gyr with a large smile on the face. So part of this large bar on the right is you actually had 2 multi-billion-dollar transactions announced in the beginning of this year. The first one being Toshiba announcing the acquisition of Landis+Gyr for over a $2 billion transaction. So you really see more and more activity from large established players who see the growth in the smart grid sector and are really keen to capture that growth in the market and are acquiring well-established players with strong product offering and strong reputation. And that's really the case of Toshiba and Landis+Gyr. And then all the other players here also have been involved in some transactions since the beginning of this year. Okay, this is where potentially I become a bit more controversial, and I'm happy to answer any clarifying questions over drinks. So what are the investment trends in the smart grid, and where do we think the market is heading? Well, first of all, there's an abundance of capital. So you have strategic players interested, you have clean tech IT funds interested. So the risk is that with this abundance of capital and a smaller number of companies, well, potentially you're going to have inflated valuations and what I call opportunistic fundraising, where companies unfortunately go on the market to raise more money than they actually need because they think they can achieve it. So the smart grid sector is so broad that actually I've been saying a lot of things that were potentially wrong for certain subsectors of the sector. But we divide it into the one we are most interested in as an investor is everything related to the grid efficiency, so doing more with less. So that's the distribution automation, grid level efficiency, so a more efficient transformer, for example, and demand response on the industrial and commercial level. Because we really see those three as some things you can implement in the short term, and you actually don't need to wait for regulation to be in place to have a strong business case and to make money out of those three. It's not to say that the other ones are not, you're not going to have successful companies in those sectors. That's not to say that at all. It's more to say that you still have a huge level of uncertainty from the market. And you see a lot of products and offerings where actually there's not a strong business case. And if you look at the return on investment or the payback of those products and services, well, there is no way they would get rolled out or implemented if it was not for regulation. So what are we looking for as an investor? Because we haven't yet made an investment in the smart grid, and it's not for a lack of interest. So really feel free to forward investment opportunities my way. But being a minority investor, the most important for us is definitely the management team. It has to be a management team we can trust, and also it has to be a management team which is properly incentivized. Because if we believe in the management team, well, no matter the change in the regulation or the market, we'll be confident that they're going to be able to deal with that. In terms of the product and service, it's really important for us to see a clear customer value proposition. So are you solving a problem? Are you meeting a need? Is there a good payback, a good return on investment? Those are really important things. And then if you have that, well, you should have also some strong customer traction. So we're not necessarily looking for companies who are revenue generating, although it is definitely a plus. But we're looking at least for companies who have been in discussion with potential clients and see where it can go. In terms of the secret sauce, well, I think that's now probably it's going to move up the hierarchy of what's important to us because of a recent case where we're about to make our first smart grid investment, but unfortunately we realized that the IP was not protected enough. So essentially the secret sauce of this company was not existent. So for us, secret sauce means either a clever business model or strong protected IP. Conclusion, well, why the smart grid? Well, it is a low cost, or as Sarah pointed out to me, potentially a low cost enabler of the low carbon economy. Carbon is available, so if you are fundraising, there are definitely strategic players and then clean tech and IT funds out there looking for investment opportunities. And those investment opportunities exist, so they should be, what we expect is to see increased activity in the market, and definitely hope that Novus Modus is going to be part of those next investments. So that's me. If you have enough time to write that email address down, feel free to contact me. Thank you. Thank you.